Welcome back to another video. I hope you are doing well. In today's video, we want to talk about why I am closing my Spaceship Voyager account. And we're gonna I'll also show you what the cost structure is currently, because that is a topic that recently was discussed quite a bit about Spaceship Voyager, and I'm also going to share my experience about Spaceship Voyager, the experience I gained over the last 2 years of using Spaceship Voyager. Towards the middle of the video, we're going to talk about the current market situation and how I am reacting at this moment and what I'm doing. And towards the end of the video, we're going to do another Q&A session. This is a live video, so I'm streaming this live for everyone who is watching now. So please submit your questions in the comment if you have something that you would like me to talk about. If you watch this video as a recording, feel free to just put your question into the comments, and I might get to it in my next video when I'm doing another live session, and I'll get to it then. But yeah, let's get straight into the content. And obviously, I first wanted to talk about Spaceship Voyager, and I will be closing my account with them. But before I go into the details, I want to first start talking in why I opened the account in the first place. And it really started 2 years ago in about May 2020. Just after I started this YouTube channel, I thought, what could be a good idea that would be an interesting topic to follow along, and that also would basically show how you could start with investing, even if you only have little amounts of money. So I started a challenge where I invested $1 Australian for every new subscriber to my channel. So I did that. I invested $1 Australian for every new subscriber into Spaceship Voyager. Because if you have only $1 or $2 or $50, there are not many places where you can invest your money, especially not for a relatively low cost. So the idea was that for every new subscriber, up until 500 subscribers, I would put my money into Spaceship Voyager. And if I would have more than 500 Australian dollars, I would start to look for other types of investment. I would have bought my first couple of shares into a dedicated account, just to show how you can start investing. Unfortunately, I had a very long break on my YouTube channel, so I did not continue to invest over the last couple of months. However, I still thought this was a great challenge, but a couple of things have changed. So I don't want to continue this particular challenge, and I also think Spaceship Voyager is not the right place anymore to invest low amounts of money. So if you only have a couple of dollars that you want to invest, and this is not increasing a lot over a short amount of time, then Spaceship Voyager is potentially not the right place anymore to invest. But I'll show you in detail what that means in an Excel document. And another thing that I really quickly want to mention is while Spaceship Voyager has an affiliate option, which I also promoted, I had literally only 2 people that signed up. So it's not like I made a lot of money from people that actually signed up for Spaceship Voyager. I truly thought this is something that people can use if they want to start investing. So it was never about getting a lot of affiliate money from that. And I also want to mention that a big thank you to Samazu, sorry. He actually made a comment on my on one of my videos that he thinks that the cost structure when it changed was actually not beneficial anymore for investors. And this comment got me thinking if I actually should continue with the journey or not. And that was the first time that I went deep onto what the new cost structure actually means. And so we're going to see that now. How has the cost structure changed? So in the past, Spaceship Voyager was actually free for everyone who invested up to 5,000 Australian dollars into their account. So everything from 0 to 5,000 Australian dollars, Spaceship Voyager was totally free, and you had to pay nothing in fees, nothing for transactional fees, so nothing to pay into your account, nothing to withdrawal, no withdrawal fees. So actually really competitive in terms of cost. If you had more than 5,000 Australian dollar in your account, you had to pay a yearly fee that was relatively low as well. I don't know exactly what it was, but it was below 1%. And it was really, really competitive. This has changed a couple of months ago, probably half a year ago. Now, every investment over 100 Australian dollars has to pay a flat monthly fee of $2.50. So every month you get charged $2.50 regardless of how much money you have in your account. So it really changed dramatically, especially for investors that had only small amounts of money in their account. So it's probably not worthwhile anymore, depending on your situation and also depending on how you use it. And I talk about this in detail when I share my screen. And so I now want to talk a little bit about their different products, just so we have that understanding again. Spaceship Voyager provides a platform where you can invest into 3 different portfolios. One portfolio, which is the origin portfolio, is basically something like an index product, where you basically buy the largest company of Australia and the largest companies of America. The split is roughly, I think, 60% US, 30% Australia, and a little bit in Asia. But it really is focused on companies that have a really high market cap. And this is obviously also covering indices. So very, very similar to an ETF that would invest into indices. Then there is Spaceship Earth portfolio. This is relatively new, and they were set out to provide an exposure to sustainable companies. So sustainable investment, Earth, because they were covering UN sustainability development goals. So they had set some criteria to find companies that obviously were trying to provide a sustainable ecosystem and try to support an eco-friendly environment. Then Spaceship Universe portfolio was the third option, which I went for in my investment style. This was growth oriented. So Spaceship Voyager had an investment team that looked to find companies that have a potential growth runway, that are relatively innovative in what they do, and that are potentially a little bit more expensive than other companies, however, that have a really high growth runway for a long time. So more risky, but potentially also more rewarding in the description, how they describe that. This is the portfolio option that I went for. And what I did, I contributed weekly. So every week I updated my subscriber account and I put the money towards this specific portfolio. And now I wanted to share my screen and I want to show you how the cost structure compares to an investment into an ETF, for example. And this will show clearly how expensive the product is in certain cases and how cheap it can be depending on how much money you have invested into the portfolio. this is what it looks like. So we have the fund. In this case, I have the 3 different types of portfolios, just to compare them with 3 different ETFs as well. And here I have invested 1,000 Australian dollars as an example, and here we would invest 15,000 Australian dollars as an example. And you can see that the cost for the Spaceship Voyager stays the same per year, regardless of how much money you actually have invested. And when you calculate that down to a percentage of your investment, it obviously makes a big difference. When you have only 1,000 Australian dollar invested, this is 3% of your portfolio per year that you have to pay in fees, which is a lot for an investment product. If you have more money invested, for example, 15,000, it's relatively low. It's only 0.2% per year on your investment on a product that potentially fits exactly your need. And again, the good thing is you can invest into this product anytime over the year and how often you want over the year. So you can contribute to your fund as often as you like. If you, on the other hand, take an ETF, and I've chosen 3 different ETFs, for the universe portfolio, I've compared it to a high growth ETF and really only around the cost. For the Origin portfolio, I've compared it to the MSCI World. And for the Earth portfolio, I've compared it to an ethical investment ETF, all from Vanguard. Really only to get some perspective into all that. I've assumed that ETF, you would put money into this ETF only once a year, which would account for purchasing cost to the broker that you use, so brokerage, from around 10 Australian dollars. Yes, there are some cheaper brokers out there, but this is probably an average of what you would pay with a broker of your choice. The yearly cost for ETFs is not depending on how much money you put in, but it's always the same regardless of how much money you actually put in. So it always stays the same on, in this case, 0.27%, in this case, 0.18% per year. And there you can already see that with small amounts of money, you are better off choosing an ETF. If you only buy this once a year and you let it run for however long. If you take the money out of that ETF, there's obviously again brokerage that you have to pay, but we only account for the buying at this particular example. When you, however, put more money or have more money into your investments, for example, 15,000 Australian dollars, it's already a different story. In this universe example where I have a high growth ETF, the cost per year for this ETF is already $50.50. That is the brokerage and the yearly cost that you have for that ETF. And there you can see already that with more money invested, Spaceship Voyager can still be a cheap alternative, even if you don't use the option of regularly contributing to your investments. So again, it really depends on how you use it. And just to go through the list and we see the final results, for the universe portfolio compared to a high growth ETF, and you have more invested, it potentially would be still not cheaper. However, with the other examples, we come, it would actually already be cheaper. For the other example, we would be not as far away, so $30 compared to $37, because this is cheaper in the yearly fees, but still you would pay a little bit more. But so it breaks even at between 10,000 and 15,000, depending on where your product is. Everything below, it's not worth it worth it if you put money in only once a year, but if you invest regularly and this is what you want to do, it certainly can still be interesting. Let's go and talk a little bit about how I found Spaceship Voyager in terms of how the company was and how they communicated with us as customers. I think this was actually really well and obviously very startup like. So, a very young company, very fresh. They send out regularly emails about updates they made on their portfolio, if they made any changes, if they bought new stocks. And that was obviously only the case for the Earth portfolio or the universe portfolio, because the origin portfolio stayed relatively unchanged. But they communicated that, they shared their reasons behind it. So they always explained why they purchased a specific stock or why they would sell a specific stock. And I found that really interesting because that gave some perspective and it was actually really good to see. The other thing is they send out an email on weekly basis that was more around investing information and shared knowledge about investing and how you should invest, what investing means, what different type of investments there are, how you can save money, so also money saving tips, and all kind of tips around personal finance. And they were really good and very well written articles. So I actually really appreciated their communications. So yeah, I hope this gave a little bit of a perspective of why I have used it in the past, explaining how I tried to use it for this investing challenge and how it has changed now. And this is obviously the reason why it's not interesting for me anymore, because I have only around 600 Australian dollar in this account at the moment, and I'm not contributing any more money into this account. And that's why it's way too expensive to keep this running for forever if I do, first of all, not invest any more money, and also if I only have this relatively low balance into the account. So I'm going to take this money out and I'm going to invest it elsewhere. This was always my own money anyway. So I just probably contributed to my normal investing portfolio. Now I want to talk a little bit about the current market situation. You could see already a lot of videos that talked about there is another crash coming. The Dow has already corrected quite a bit. And while it is true that the market went down over the last couple of weeks and especially the last 10 days, and it has come down from a high where it was really really exuberant. And those market corrections are certainly very, very normal. And but you could see on YouTube lots of videos where people talked about this is the next crash. People sell all your stocks. I will certainly not make one of those videos. And the only thing that I want to contribute to the current market situation is that there will always be situations in the stock market where the indices and also stocks will go down by 50%. That can happen anytime. It can happen to any type of investments, regardless of ETF or in individual companies. Certain things happen in the world, and this obviously affects the markets, and that can obviously have a huge impact on future prices. This can always happen, and we always have to live with this situation. And what can we do or in those situations, but also what can we do to feel comfortable during those times when the market goes down? In my opinion, the best thing you can do is having a clear structure and plan of what you want to do and how you want to invest. Especially when you are a long-term investor. Have an idea about how you want to invest your money. And that way, you don't really have to worry about current market situation. In my case, for example, I would call myself a value investor, I try to find companies that have a long runway of cash flows that I feel I get for a really good price, for a very good value. And I even try to buy those with a margin of safety. I was reminded on the Movember challenge that we had, with the margin of safety. And this obviously I try to do those valuations on those companies, and I buy companies only if I know very certain that those companies will do well over the long term, even if the market in general will go down, and potentially subsequently those companies as well. But with a long-term focus, this is then not a big problem for me. And if I can buy those companies for a reasonable price, it is, I describe this as low risk, high return strategy. So regardless of where the current market is, I try to buy companies that have a good price based on the valuation I gave it. And I will have a long runway with those companies over the long term. So low risk, high returns over the long term. And another thing that obviously I try to follow in all my investments, I do not try to time the market. It's all about time in the market. So I make an investment and I leave this running for as long as I can and as long as possible. In the best case, I would hold this company forever, so for a lifetime. And I definitely do not listen to any market predictions. I do not follow them, and I definitely do not stress about current market changes. The only thing that those downturns of markets would potentially do is gave me a good buying opportunity to deploy even more money into the market. If I have already done my research on companies, I know those companies very well, and I am of the opinion that those companies will do well in the future. I would use the chance to buy even more pieces of those companies to have an even higher return in the future. I hope that helped a little bit to overcome the fear in current situations. So try to stick to your investment strategy and try to develop a strategy that you can live with regardless of what the market is doing. So now going into the Q&A session for today. Again, if you have any questions, just put them in the comments below, and I will get to them in the next video. For today, I have a question from one of my last videos, and I actually was asked on how would you start with investing if you would start today and would have no knowledge about investing, and it would be basically the first time that you would do anything. And well, there are tons of things that I could say now. There are obviously so many things that you can do and so many ways on how you can start investing. And I probably only want to talk about probably only 3 things that I would do at a start. And obviously the very first thing would be trying to get as many informations about investing as I can. And the one thing is obviously going on the internet and search for investing and read about investing. But I probably would recommend buying some books that describe, first of all, maybe general finance topics on how to work with your finance, maybe even how to budget correctly and how you have to go about your financing anyway. And then if you understand how to create a financial structure for yourself, one part of that financial education is how to invest correctly. And there you can then buy some other books, especially around the situation that or the way you would like to invest. And 3 books that I can recommend is I've read, for example, the Barefoot Investor from Scott Pipe. It's an Australian book, and he I think he has written his book in a way that you really enjoy reading it, and it was really helpful for me trying to guess a couple of investing concepts, even though I have already been investing into the share market for a long time. But what I got from it more was how to create different accounts, on how to make sure that you stay accountable for with your money, and how you make sure that you don't overspend any money, and how to budget correctly, and how to make your life easy when it comes to working with money. Another book that was very inspiring was Rich Dad Poor Dad from Robert Kiyosaki. It's obviously a book that is well covered on YouTube, and it's all about the concept of not working for time, but let your basically work for investments, and try to make investments that pay more than your basically the salary you would get from a normal job. And it tries to explain the concept of investing and how beneficial it can be. And it has also an investing quadrant, which it describes different ways of how to make money. And it really helps getting an idea about how investing works and what compounding means, and how you can develop other income streams. So really interesting read, sometimes a little bit over the top, especially his personality is is very strong, but a book that I can really recommend. And then if you are German and you like to read a German book that is focused for investors on the stock market, there is Beate Zander. I've talked about her, I think, in my last video as well. Unfortunately, she has passed away in 2020. But she has written a number of books. She was a school teacher, and she has written a number of books, and also updated those books over the years. And those books are called Der Aktien- und Börsenführerschein. So it really starts from, she really starts to explain how you should invest. She has a specific strategy that she explains, and she also describes what investment strategy could be good for you. But she really goes from a start, but goes really deep and in a really practical way. So I really like those books as well. The second thing I would do if I would start investing, open a brokerage account and just get going. And I would personally recommend opening a brokerage account with a more established broker, and not necessarily one of those fintech companies that have only an app interface, but a broker where you have a web interface and where you get a little bit more information about the share market as well. This feels less than a game. I feel like the investment apps, they are very gamified now, so they look like you are not really investing your own money. So it doesn't feel real sometimes when you're investing. And other brokers, in my opinion, it feels more real when you actually buy some shares, and it actually feels like you buy a piece of that company. So I would recommend that. And the last thing is then actually start investing. Buy something, buy either a small piece of a company, so buy one share of something from a company that you deeply care about, something that you know, that you use every day, a company that you heard about, that you feel like you trust that company. If you have an iPhone, maybe it's Apple. If you use Microsoft products and you like their products, maybe it's one share of Microsoft, or just a fraction of a share. Whatever it might be. Or if you like Coca-Cola, buy a piece or buy a share from Coca-Cola, or buy one ETF, whatever it is. But this way you get exposure, and this way you learn more about the company, and try to educate yourself deep on what you have purchased. Try to go and read the annual reports, or try to read the product statement from that ETF, and really try to understand of what is the cost, what does it do, what is your What is your dividend that you might get? And how is, when it's about a company, how is the company managed? So all these are things that I would do when I start. And there are obviously, as I said, tons more things that you can do at the start. But I hope this gave you a bit of an idea of how I would start it with investing. Thanks again for watching the video. Leave your comments in the description below the video if you have any questions for the next video. And I'm looking forward to see you again next week. Until then, bye.